Hello, everyone. It is Flag Day, June 14th, 2021. And thank you for everything that those who have served and gave their life for this country. Just want to say thank you. Well, I am trying something new again for my YouTube channel. It seems like it's a never-ending journey of learning. I learned a long time ago not to get mad or get upset. And yes, I'm going to fix this squeaky chair someday. What did I learn today? And it's only taken me, I started studying computers back in the 70s. And I finally learned today how to do a screenshot. So I'm going to read an article here. And it's from the kitco.com commentary section from today. Why is inflation a double-edged sword for gold? By Gary Wagner. You can reach him at Gary, or I should say Gary at thegoldforecast.com. He's out of Hawaii, and he's pretty sharp. So I am going to read this because I need to practice my voice. I've pretty much, after all the sorrows in my life since 2000 and since the 2000s, so that's only been 20 years, and maybe I have 20 years of better things happening. I believe that the Lord will restore the years that the famine, the drought, and the locust have eaten away. So maybe I do have 20 more years. Better save my money. That's why I'm studying these financial reports. And as Gary says, or types, he shows a graph, which I don't quite understand. Today's gold price at $18.60 US dollars, and silver at 27.60 cents. However, as I've said before, try to order a silver coin and you'll find out that they're back ordered. And gold, I went and looked at the 1 ounce American Eagle today, and you can buy one for $2,100 plus shipping and insurance. So the discrepancy in the price of gold is because it's called a premium. So the premium is $240 more or less per ounce. Here we go. Beginning tomorrow, the Federal Reserve will begin its FOMC meeting for June. And I don't know what FOMC is yet. And it'll conclude on Wednesday. Following the conclusion, the Federal Reserve will release a statement which a press conference will follow by Chairman Jerome Powell. One of the most important topics that market participants will focus upon is the forward action of the Federal Reserve as to whether or not they will begin to taper their massive asset purchases which have now swelled their balance sheet to well over 7 trillion. And I imagine it's more than that. So the reason the stock market, especially the Nasdaq and the S&P, are up and will continue to go up is because they keep pumping money into the system. And just so us individuals don't get upset with what they're doing, they've given us all a little Christmas gift twice this year, I believe. Back to the article. Gold is a primary safe haven asset that has been used historically as a hedge against inflation. Simply put, the buying power of gold has not changed in the last 100 years and has held its value better than any currency on earth. According to Investopedia, inflation is the decline of purchasing power of a given currency over time. A quantitative statement of rate at which the decline in purchasing power occurs can be reflected in the increase of an average price level of a basket of selected goods and services in an economy over this, I think he means the same period of time. He types about as well as I talk. For example, in 1907, a single troy ounce of gold sold for $20.67, which meant that a $20 gold coin was worth $20. The same value as a $20 US bill, a gold certificate redeemable in gold at any bank back then. That $20 bill or $20 gold piece had incredible buying power back then. It could fund an evening in New York, including a stay at the Plaza, a new suit, and a steak dinner. And I did see a movie from the 60s. It had an actor in it. I'll look it up. And his story, Gregory Peck, his story was that he had been given a check for something that he had sold redeemable in gold dollars about this time in history, or so the movie went. And nobody had enough money to cash it. So they put him up in the best hotel, put him on a buying spree, hoping that he would spend it, enough of it that they would be able to cash what was left and pay off his bills. I won't ruin the ending of it for you, but it all worked out. So in 1907, the Plaza in New York City opened its doors and the cost of a room was $2.50 per night. According to reference.com, a properly dressed gentleman in 1900 would have spent about $7 to $16 on a suit, $1 on each of his dress shirts, around $7 on his top coat, and 48 cents for a fine felt hat. A steak dinner at the Plaza would cost approximately $1.50. In other words, the approximate cost for a night in New York after buying an $8 suit, a dress shirt for $1, a top coat for $7, a felt hat for $48, a night at the Plaza for $2.50, and a steak dinner for $1.50. Your night on the town in New York would cost $20.48, and you could use either your gold coin or your gold certificate, US $20 redeemable in gold, $20 bill, to cover the majority of the purchase. Now let's go to today, where I have just told you what the price was, and this reminds me of a video I have on my site. Maybe I'll be able to connect the two together where I'm talking about there's 20 there's 2,000 pennies in a $20 bill, which would mean that, based on this article, because we all listen to each other and talk to each other, I watch all Kitco's videos, it would mean that basically our US dollar is worth a penny on the dollar. So in 2021, a $20 US coin at today's pricing is roughly, as I said, he says here the paper price, which is $1867.20. Add the premium, add the shipping, insurance. Compared with the US $20 bill, which is worth $20, it is quite obvious that today's fiat currency probably would not cover the steak dinner, let alone any of the other items listed in 1907, listed above. This example clearly illustrates that gold, for the most part, has held its value in terms of what goods and services you're able to buy 100 years ago. It clearly illustrates that gold historically has been an excellent source of protection against inflation. And I was just talking to some of my online buddies today, and we were talking about how to go out and get a decent cheeseburger with fries without your $3 soda pop would cost $25. Even if you go to Mickey D's, you're going to be spending probably $10 and still go away hungry. Now he says, here's the rub. Right now, inflation is a double-edged sword that can cut both ways. While it has eloquently maintained its buying power over the last 100 years, the recent rise in inflation following the global recession is causing many analysts and economists to wonder when the Federal Reserve will begin to taper its asset purchases and when they will once again raise interest rates. George Gammon talks a lot about this at georgegammon.com. He uses a whiteboard and explains how the Fed and the banks lend money, create money, make the stock market move up, and how they move the paper price of these precious metal assets basically not to go anywhere, which the average person isn't interested in saving gold if they can afford it, because it hasn't done much. It just sits there while the price of a jewelry necklace, gold necklace, 14 karat, continues to go up in price. I saw that it gets a 14 karat, halfway decent gold bracelet at Apex.com was selling for like $450. As he goes on to say, we're almost done here. Hang in there. As such, any talk of tapering could have a dramatic effect on real interest rates of the U.S. debt, which would be a bearish influence on gold. The most recent consumer price index, which was released yesterday, and yesterday for him was Thursday, I think if I remember right, that was June 10th, June 11th, that it was annualized at the rate of 5%. And of course, they want to keep it at 2%. This is the highest level of inflation since the recession following the banking crisis of 2008. So as interest rates go up, people stick their money into paper bonds, it's In the old days, when you were getting 5% interest on your money, you were actually making more money by having it in a money market than you were in a sitting on an ounce of gold. Market participants are already anticipating that possibility with the gold future basis, the most active August 2021 COMEX contract, which is the paper contract index, currently trading down $12 on the day at 1867 after hitting an intraday low of 1845, which is concurrently where the 200-day moving average is fixed. That's why you don't see gold breaking out of the $1,900 range unless you're trying to buy it. Our technical studies indicate that the major support for gold prices remains at 1845, which is based upon a combination of 200-day moving average and the 61.A Fibonacci retracement. I don't know what that means either. That's what's so great. You can get on the internet and you can copy and paste these words and you just get smarter and smarter. The studies also indicate that resistance begins at 1900 to 1905, which is, it hasn't broke out of there, with major resistance at 1920, which is the highest trading level since this rally began at the end of March 2021, when a double bottom at 1692 was identified. For more information, contact Gary Wagner, Gary at goldforecast.com, the Gold Forecast. Brought to you by Kitco News. Well, thank you for allowing me to practice my internet skills, my speaking skills, my screenshot, which I guess I'll have to get into iMovie now to include it. Always something to do. Have a good evening, everyone. All is fine and good here, except it's been a little warm. So, we'll talk with you later.